Okay, hi there, traders. Be up and running in just a minute. Just let me know if you can hear me. I'm just typing to the chat as people are coming in. So I hope you like my little Trumpinator picture. G'day, Pete. How are you, mate? How's everyone going today? Anyway, how are you, Pete? Market's actually holding up quite well, to be brutally honest. It's better than I thought. I think that there's a big flush, which we'll talk about in a minute, on Friday coming to the US session, which sorry, the European session, which got a lot of people out in the open. Bit of a cleanup, and then we bounce back. So yeah, it's the frustrating thing, isn't it? Just you either want to get hammered and get out and to reset, otherwise you sort of this grind and then and hope that we're actually going to bounce back. You look at the, I'll show you. We'll go through it in just a minute. You look at the SPY. The SPY bounced coming to the close on Friday, well Saturday morning, and a bit of a short squeeze as the US didn't really go over, didn't roll over. And we've had all over the weekends. UK is going into lockdown. Well, England, London, um, and it actually opens up a hell of a lot stronger than where it closed on Friday. So it's just a massive. It's just a bit of a setup on the open, and big flush lower, and it's been bouncing back since. It's probably getting to a point now where we might get a bit of selling coming into the late afternoon into the close. Interest rates tomorrow as well. Um, so yeah, RBA 2:30 I think tomorrow. It's Tuesday, isn't it? First Tuesday of the month. Yep. All right, we'll get started. Welcome to Trade Setup. And the live stream, it is the 2nd of November. So I can never quite remember the date. It's either tomorrow or the next day, the elections. So far, from what I understand, it looks like a Biden victory. But from what they say, the most important states, the closely fought ones, are still relatively close. They're a bit closer than what the overall numbers are saying. So it's going to be, the closer it is, I think it's going to, obviously, I think it's going to create volatility purely because people love volatility and there'll be people smashing it left, right, and center coming into the elections as like it happened last time. They've got so many votes here, and then bang, the market takes off, and then Trump's winning, drops like a stone, and then no, Hillary's back, and then bang, it's up again. So there was some massive volatility. If you look back the day that the votes were getting counted and getting released, obviously on the news network, and you can just tell which who won that state or who got more votes here because the market was swinging quite rapidly. So I would expect a lot more volatility. I think the key thing now, for what I see, is it's obviously stimulus again. It looks like this market believes and needs more stimulus after the elections, and I think it's kind of like one of those things at foregone conclusion. But I don't particularly think it is. I don't think he's been written off completely at all. Um, and I wouldn't suggest that if he comes in, if he wins, and all of a sudden it's in his hands with stimulus, I don't think particularly wants to give out too much stimulus. I was watching an old, I don't know what it was, a YouTube video on him years ago, and he was just saying about the US is, if it was a company, it'd be broke. They're losing money quarter on quarter or whatever, by a certain billion all the time, and they're just running on debt. Um, that was his view anyway, and it's a hell of a lot worse now than what it was back then. So I sort of look at it. He's more, the entrepreneur type, and he wants to get the economy up and running and start. He's not really the problem he's going to be faced if he gets in is COVID, and the increase in numbers in the US in particular too. They're the only ones with those sorts of numbers that should be in lockdown that are not. Um, they're killing it really, well, literally. So I don't know how that's going to be tackled. I can't see why, if he hasn't done anything about it now, why would he do anything soon? Stimulus is going to be so all these sorts of questions. If he wins, if it looks like he's winning, I think it's going to create that volatility in the market. Now, if obviously Biden wins and it's a bit of a clean sweep, then everyone's expecting potentially going back into lockdowns, more restrictions to come into place and a massive stimulus package to throw at the market. And, lo and behold, things will be going back up again, because it's just a repeat of what's happened in the past. Not always the case but that's what, I could see happening. So again, it comes down to who's going to win and what's going to happen with the way of stimulus now. Yeah, either way, it's going to create some volatility if it's close to. So I think what we're seeing, not so much today, but just last few days, it's just some gains being locked away. Look at the Nasdaq. I'll get rid of this actually. Don't want to look at him too long. The Nasdaq. Where are we? Here. So we've spoken about this quite a few times. Yeah, that doesn't, just because people are saying that's a bit extended. Yeah, it got sold off, and then we got a lower high coming into play. It could be a lower high. It could be just massive contraction over time. You got high low starting to build here, and then another lower high. I think we'll know pretty quickly what's going to happen with the Nasdaq. But a bit of heat's coming out of that after earnings. I think earnings would beat expectations, but what doesn't beat expectations in the US on the S&P? They set them so low that most companies can beat expectations. Yet it's the outlook that I think people are a bit disappointed with those big tech stocks, and they probably didn't justify the high prices, and people are just, good idea to lock away some gains. They got hit the hardest. What was it, 2.6% on Nasdaq on Friday night, and we're looking at the Dow was only 0.6%, so a big difference there. And the S&P, a lot of that drag down was because of your big tech stocks, the big boys, coming off. If we go scroll down, we just check out Amazon down 5.4%, Facebook 6.3%. They got hammered. Google was up. Apple was down 5.6%. So there's quite a few big companies there, a big drag on the Nasdaq. So are we going to see more of that coming into the elections, or is that, there'll be a lot of people that have been long for quite a while. A lot of juice still that could come out of that market quite easily. And for that bubble to, has it been pricked at the moment, and is it ready to take a bit of a nosedive? Don't know. There's just a lot of questions, but basically, I think the next few days we'll find out the gist of the market and what we could be facing. So, you can't blame anyone for taking some risk off the table, especially after that run. If you're sitting around, the market's been going sideways and you've been buying it on the dips, and it's just going sideways. Yeah, it's a different story. You might find people happy to hold. But the way it's gone up so hard, people are going to be protecting. You can always buy back in, even if it has to be a higher price, because you're not going to, you're not risking too much. It's all about risk mitigation, I guess you can call it, coming into these elections, because I think there's two. Yeah, Biden wins. I don't know how he's going to. We just don't know the plans. I haven't really read up what his focus is going to be on, and all that. Yeah, definitely caution warranted, because who would have thought, if you're watching and trading around the last election, the way coming into the victory of Trump's victory, the market wasn't reacting like they liked him. As in, we've spoken about this many times. Every time it was talk up him winning a seat, or whatever they call it, winning votes, beating Hillary, the market got hammered. And every time it's talk of her winning, the market rallied hard. Yet as soon as he won, it was a complete change, and so it was a massive setup. So whether the market's going to be doing something like that again, we don't know. Maybe it's just going to be a complete surprise that whether Trump does win, and then how are we going to react to that? The US dollar too. US dollars, you can see it's a tad uncertain too, because it's a bit of, people are saying, yeah, it's rallying on a safe haven. I think it's not really rallying on a safe haven, because you probably find, even if Trump does win, there's going to be some form of stimulus, but it may not be the biggest package that the market's expecting. So if you're short the US dollar because of all the stimulus that's been flowing into the market, then I think you'd be repositioning it also. If we just go look at the US dollar. So you can see that it's found some, bit of a base here, and that's probably because had such a tough time. Well, they haven't got any through any more stimulus. So down here, when it was coming down, we were expecting another 2 trillion potentially, and that was the talk of that. As soon as it started getting held up and they were mucking around left, right, and centre, they started playing politics with the further stimulus. Shorts build up down here was starting to close out and probably taking some risk off the table. Like I said, you can always reposition short again if you need to, um, and reset when you start to, the market starts to see what's going on. But at the moment, that US dollar telling me is, that's not a safe haven bounce. I don't think. I don't believe. I don't know or not, but when you read the news, it's a safe haven bounce. But you've got, like I said, a lot of shorts that are stacked up on the short side. And if you're short with the premise that it's going to be another 2 trillion, and now you're uncertain, what are you going to do? You're going to start easing out of some positions, taking some risk off the table. It's not about, it's about what you think is going to happen, not what's happening. Okay, so there's still, and if Biden wins, you could probably see that US dollar, volatility probably moving around a bit, but I think medium to longer term, it'll start nosediving again, especially if they're talking up stimulus, more US dollar, devalue the dollar more. There's just more dollars flooding the market. And then again, where are you going to put your money? It's the same old sort of thing, back in equities and just buy the stocks, because there's been a lot more, so many more accounts jumping into the US and just buying because they've been proven right time and time again lately. I don't know what their earnings are or anything like that, but a stock that's well overvalued, they're still buying it, and they've been right. They've been proven right. So it's sort of feeding that, I guess, that perpetual buying mood that people are in. So they get caught out sooner or later. You can guarantee that. But where is it now? I mean, like I said, if Trump gets in, is that going to be where the markets get hammered a bit, because stimulus is no longer, potentially, depends what he does with stimulus or what he can get through, or is there going to be more? I don't know if there's a clean sweep for the Democrats. I think there's going to be stimulus. They'll pump it up because that's their game plan. Whereas Trump has been talking up, saying we're going to give a bigger, better package. He probably won't. He probably turn his back on it. I mean, you don't know what he's going to do. He said no. He's changed his mind so many times. So you couldn't be certain what he's going to do. I don't know I don't think if they get a clean sweep, I don't know how it's all going to work, but I think even if they win and they can't get through, there's going to be more argy-bargy and more politics played on stimulus, and he will probably force through a weaker package, which means the US dollar would rally, which probably means that people are going to be going, well, it's not going to be as bullish as it has in the past for equity markets, especially at this level. You can't just throw a little bit of stimulus at it and expect the markets to start taking off again, especially if the US dollar starts to rally, because there's going to be, I would expect, it could be seen as a big reversal. And then, throw on top of that, you got COVID cases going nuts, UK in the lockdown, England in the lockdown, Europe, I can't remember the countries, France and Spain, is it? Italy? One of the two. They're going back into lockdown again. So there's a lot of issues. I mean, look at crude. What's crude? How's that reacting? It's reacting straight down. The more this sort of lockdown and COVID gets talked about, and the more the numbers are spiking and going up, crude's looking at it as a very big negative. Yet our equity markets are not just yet. So it's all to do with the elections and how stimulus going to continue to support the markets or not. So we really just have to sit and wait, I'd say. So in saying all that, I mean that's oil. Oil got opened. I'll go to a 30-minute chart. Oil's been thumped. Right from after we testing these highs around 41 down to 34 at the moment. That's a big move lower, and it's a big squeeze. You've got the markets been essentially sideways, and it can't take off no matter what they do. They cut production. It's not taking off because they've still got concerns of demand. And now that how much can you keep cutting production to try to support price? And you still got, the more they go in the lockdown, there's obviously less people on the roads, less cars, less need for oil or gas, and that flows right back into oil prices. So, I don't see. It'd be interesting to see whether it holds up here. It has bounced a bit. We've got all the markets, which we'll just look at in a minute, bounced a bit as well. A bit of negativity on the open, but not really as much negativity as what I would have thought. Like I said, that US dollar is gapped up and chopping around here. Aussie dollars, testing the lows, which just doesn't look too crash hot. You got pound, yen has actually bounced back from what I thought, you got a stronger US dollar. Should be look, it is good for US yen, obviously, but there's no real safe haven into yen. If it's a big safe haven sort of a move into the dollar, then yen's going to be a safe haven as well. It probably outpaces the US dollar rally, and which means that the pair itself could be under pressure, and it's been like that in the past. But whether it is again now is a different story. So really, it's just that US dollar buying. It's not really much to worry about at this time of day because we don't move the market. Asian sessions don't really move the market at the moment. As soon as Europe opens, then the market starts to move. Um, so yeah, we could sort of not really brush aside what's happening just at the moment, but a lot of the times you get these gaps. Gap down the pound, it'll reverse. Same with the dollar. The dollar's gapped up and it'll reverse. Euro really hasn't done too much, I don't think. Is that the open there? No, that was Friday. So Euro's actually been pretty benign and it's down into a big support zone as well. So there's not too much saying just yet to get too concerned with the equity movements. And again, everyone's just sort of sitting around waiting for what's going to happen with stimulus, what's going to happen, and how's it going to affect the whole market, basically. Let's go and look at any questions on those just while we totter around. We've got S&P. That was you can see that's been sold off, and it's been that big uptrend that we were just looking at before. Big uptrend's been broken. We're down in this level now, which is what 32.70 thereabouts. It's traded. It's sort of rejected off nearly that zone way back in June. Got through it, reacted off, consolidated it, and then went up. And then we've had this big fall back into it previously. Retested it, went back up towards the highs, failed to reach the highs, only just. And then we've been sold off again. So I think the market, like I said, that just shows a bit of a holding pattern more than anything else. But it's borderline set to fall over. But I don't think even if Trump wins, we still don't know exactly where it stands on stimulus. It might be that reaction where, okay, if he comes out and wins or Democrats don't get a clean sweep, then that could be bad for stimulus and people banking on stimulus to support this market. And then obviously couple that with the COVID numbers rising, so it could be that it's down here. It might just have a bit of a flush lower, but I don't want to say too much because I just don't. There's too many ifs and buts, and you never know what's going to happen. So all we're looking at is price action. Is that chance that we're sitting on that big support in the S&P and we just get this massive sell-off because there's too many questions and nothing was really answered with whoever wins. If it's not a clean sweep by Democrats, I wouldn't suggest that anything's been answered just yet. Because if it is, then you can understand it and probably put out a big package and then big stimulus package, and then, like I said, supportive markets, and you'll probably find the markets start creeping higher or start another bit of a trend back up to the all-time highs. Dow, that's again big sell-off coming to the US session. So it was in Europe. We'll look at that on the futures in a second. But that market gapped down and got supported, into the lows, back off the lows, just a little punch higher into the close, which I wouldn't think that was any particular reason. It's just that probably no big traders are willing to get out yet, so there's no big flows out. I think that's been done on this move down, probably to where you want to hold your risk at the moment. They can't be no exposure to the market, but they don't really want to be fully loaded to the market either. So I'd suggest this movement, this kind of down and sort of V-shape or W pattern is more intraday. Intraday shorts closing out into the close, maybe short in here, some buyers stepped in, short back in here, but either way, I think it's more intraday movement that we saw that little spike into the close. From intraday trading than any serious people starting to load up into coming into the elections. Not the smartest thing to do. Nasdaq, we've spoken about that, so not too crash hot. But it's still holding above this low at around 10.7. So it doesn't mean that we're going to come crashing down there. There might still be some heat come out in the next day or so. We move down to a couple of 100 points. So it could do that in another session. Another couple of percent, we're back down to these lows. And then I think it's probably settling down into the elections as well. DAX, that was pretty much after we've had that big sell-off. It's sideways action. And the same with the FTSE. The FTSE was pretty much sideways on Friday night. It did, like I said, got beating around on the open, all the futures. Just before the Europe opened, you look at the Hang Seng, which I was watching. I'll get rid of all this. So I just make myself some notes. Hang Seng, so that was the move. This is what was the first session. So the Hang Seng, if you don't know, split up into 2 sessions. I'll go to a 5-minute chart. And that should be open now, shouldn't it? So what are we doing? Popping up. So first session on the Hang Seng, you see a bit of a rally, which was more than like it was against consensus. So finding a bit of strength there, but then lo and behold, it opens up again 4 o'clock. So it closes at 3 to 4 for 1 hour close, opens back up, and then boom. So it's a bit of a, squeezing some of the shorts, a bit of a gap fill here. I was attempting to fill that gap, and then settled on its highs for the session, and then opened up, and we got belted. So if you look at the mini around that time as well, that's the Dow, was going sideways into there, so it was looking like it wasn't content on going up at all. And then you get this big thumping, and it got rallied all the way back up. So as soon as Europe opened, it opened weak, it got bought back up again. And the market started to rally from there. Look at, see if we can see it on the DAX, if I can get the futures. There we go. So that's DAX futures. You can see that was the same day on the 30th. Yep. Big gap down on the DAX. So when their futures opened, it was open 5 o'clock, 6 o'clock now. Bounce from there. So that was the lows. So what that's created is a lot of people just getting a bit nervous, and then coming into the open an hour later, they all got swept back up again. So, retail probably got a bit set up, I think, into the European Open, looking at the markets, the pre-markets going, oh, we got hammered, it's all over, we're not looking so great, and then squeezed them all back out as the market rallied. So just sort of everyone was happy to sell to get out, and they were just selling into this strength, and people were soaking up. So it bounced back quite well. So yeah, that was the markets. Let's just look at, is there anything else you want to look at? Otherwise, we'll start to get in a few stocks. And then just go for them. Just give me 1 second. I'll have a touch of coffee. All right. So what am I on here? This is the DAX. Let's just look at the markets on the open today. So that's crude opened. We're on a 5-minute chart, and then got knocked down quite hard. So that was that sort of fear driven. It's been soaked up since. So whether we grind our way back up and then we get a bit of a rollover coming to the European session, will be interesting to see whether that happens. There's Dow. So the Dow opened up basically where it closed on Friday or Saturday morning. Had a bit of a drop. So that drop was 544. A couple of 100 points solid, and it's bounced straight back again. So I don't think there's going to be too much downside until the elections just now. I mean, it could get smacked around tonight. It might be the volatility in the US session once we hear more on the elections. But for now, it's really just following what's happening in Europe and in Asia, and we've got the Nikkei. Nikkei's open gap pretty much where it closed. A bit of a flush lower, then bounce straight back. So some fairly positive moves, considering it doesn't. And that's the thing, with there's more lockdowns in place, the market seems to be reacting positively. The release of what's happening in London over the weekend into lockdown, and the markets are bouncing pretty much from where they closed on Friday night. The Hang Seng, it should be open, yep, 12:30. So I'm on a 30-minute chart here, bouncing back a bit. So there's a lot to squeeze out, from Friday. From this move down, it's held, and we've got this high low in play now. So it's looking quite positive, and I think we mentioned that in the game plan for this morning. More than likely, a lot of these earlier sessions on the Hang Seng have been positive no matter what. The market's negative, it gaps down and rallies. If it doesn't gap down, it rallies If the market's positive, it's sort of rallying on the open, but then they've got to take into account those 2 sessions, and that's where you can get the second session, get a bit of a setup from the first, and they get hit. But either way, this Hang Seng, it's longer term. We see that downtrend. It's coming off a big support zone at 2400, and it's just, does it push higher? Do we roll later on and we go back down to retest these supports? There's going to be another bid zone that's it's going to be in play somewhere around here. What's that? That's 2480, 24,080, somewhere in there. So if that holds up and we get this bit of a chop, we might just extend up and squeeze out some of these shorts that have been building up. And then it's really in anticipation of what's going to happen in Europe and the US a bit later on. But for now, there's markets, like I said, a bit more positive. So this was the SPY. That was that squeeze we talked about, straight through that level at 59.28. That's just a bit of a short squeeze. I think shorts were thinking it was going to rally, drop, wasn't happening, and you don't really want to hold short over the weekend because you just don't know what's going to happen. It's too long. If you've got an hour or so to wait, normally during the week when our market closes, I think it's 7 a.m. and then we're open again at 9:50 on the futures. You can potentially hold your positions there, and then you wouldn't expect too much to happen in that hour because no one really cares about the Aussie markets. There's going to be no major news releases, and probably till if someone's trying to buy, like Trump, for instance, would typically talk up anything positive if he's trying to support the markets coming into the European session or early into Asian session, but not really between those times anyway. He doesn't really care about Australia. It's not going to support anything. So, but to hold a position over the weekend, especially short at this moment, because I think a lot of people are still thinking stimulus and support, higher prices on equity markets, US, we get dragged higher, so on and so forth. Forget about what's happening with COVID. The more lockdowns, what happened to economies, it's all about the financial support into, I guess, markets and stimulus. So yeah, big squeeze there on the open today. So that was probably looking at, I think it was a 40, 50 point open up on the ASX to open stronger. We got this big squeeze all before. So this was right on 10 o'clock. So by the time the market's open, we sort of retraced a lot of that market, and the market didn't open anywhere near as strong as what we thought on the ASX. And it's been in negative territory. I don't know exactly where it is now. It's up 27, so it's making back, some of that ground where it should have opened. So it just seems to me like a bit of a retail flush. They look at this open, they might be loading up before they go to work, put their positions in to the equities, and the equities get smashed down, they get stopped out, it gets squeezed right back down again, and then it starts to build up. So it squeezed back down into some buy orders, and the market gets soaked up and soaks up that selling pressure and starts to lift. So, if you're, the funds, and not so much the funds, but your insto buys, you don't really want to buy when the market's way up here, or it's been squeezed, you're expecting up 50 points, especially coming to the elections. You'd rather engineer a bit of a squeeze first, and then if you can, obviously a bit of a squeeze first, and then buy that lower prices rally into the close, and you might do the same thing tomorrow, squeeze them out a bit. It just depends. I don't think you have any longer term players, but happy to dive in just yet. If you're a longer term player, you're probably better just sitting on the sidelines for now and just see what happens in the US. The shorter term, they can play around with it a bit better. So we're seeing this squeeze up here, right back in that bid zone again at 58.95, but supported. You can see this high low build. I think I went long in here somewhere, only for a few points up into this resistance. So somewhere around 17 and 28, only 10 points, I think it was. It's gone on a bit further than what I thought, but either way, it's we're squeezing back up to this zone, back up to this 59.48. So it'll be interesting to see whether it holds that into the European session, but gauging what Hang Seng, Nikkei, and the Dow are doing now, it's a fairly stronger than what we expected market. So that's why it's important not to get too caught up in a bias. And I was talking to this Davin, I don't know if anyone knows Davin, talking to him last night about it, just trying to keep away from the biases, especially with the Hang Seng. If you're intraday trading it, if you think it's going to be weak, like you may have on Friday, if you go and look at, where are we? I think that was it there. No, that wasn't it. Oh, it's 30-minute chart. So if you thought in here, we're going to be fairly weak because I think the US is down, and then we turn around and we open weaker and just grind up all day, and and your bias was constantly short, you're probably just looking for shorts and you get caught up looking for shorts the whole time. And I mean, lo and behold, the second session, yeah, you're proven right, but that first session is just made to squeeze you out and put you back on the sidelines. Okay, so it's trying to, while you're trading this, even though if we go to 5 minute, I think I was biased fairly short coming into that session. Here we go. Is that it there? So the market opened up. I think it was this candle. There you go. So I was biased short. I still traded this long. What it did, what killed me a bit because I was biased short was looking at price action, thinking I wasn't willing to hold it for too long. So really the day wasn't very eventful. I had a couple of shorts in there too because I was biased short, but it was quick to get out when you realise you're not on the right side of the market. But I didn't hold the longs as much, and it's because of having that preconceived bias towards the market, thinking it should be short, rather than just looking at price action. And price action's not saying anything about being short. They were holding higher levels, a bit of a flush here, but even this big flush down, which would have dragged in a few shorts, didn't break an anchor to the uptrend. It was still trending up, found support, and started holding up again, grinding up, took out the highs, bit of a flush lower, and those flush lowers just anyone that's been buying it late, it just squeezed out and it resets again and goes up. So that's a good example of why you shouldn't be biased, have a bias coming in the market, just watching price action, especially if you're technical, unless you don't try to read too much, because I think for me anyway, it just confuses me because that there are news sources that are completely biased and they've proven it time and time again. So if you're reading that and you're forming your own bias in your head, then it's going to either keep you out of the market or get you on the wrong side of the market. So that's it. What we'll do is what stocks that you want to look at? Just if there's anything in particular that you want to look at, just chuck it into the chat. And what I'll do is I'll start off with a couple that I've got on the radar. Like I said, even if they do set up, I don't really want to do anything until we know more about what's happening with the elections. So it's kind of makes it a bit tougher. This is one we popped out today, ASM. It looks pretty good, and it has, I think it's rallied about 10 cents. It's a bugger, isn't it? Did that just come out? 93 minutes. So that's a rare earths. K&M will do. So that's rare earths, this one here, and it hasn't been going for too long. I think it's back in August. What was that? Maybe that's the first day. First day of trading, maybe the 30th of August, 30th of July, thereabouts. So I come online and you can see the volume. There would have been, I don't know where it floated. Say it was floated at $1. There would have been that quick. I don't know what the market was doing around there. Could be some negativity hanging around if you're holding it, and especially if I don't know if anyone knows what seed capital is. The it's the price that your first initial investors getting in, and they're rewarded by getting probably half of what the float price was. So if it's floated at $1, you might find the seed was offered at 50 cents. So if you had it from 50 cents, you essentially doubled your money on the open. Then you're probably going to find there's going to be quite a few people, good story or not, they're going to take the opportunity, considering the markets, to just book some gains and call it a day. And there's a lot of people that just trade. They can get onto these IPOs and things early or get into seed early. That's their game. They're not worried about holding it. They might have a core position that they can hold for a long time if they really believe in it. But I guess there's going to be a lot of factors. Obviously, you're going to know a bit more about the company, might have a bit of an inside track on it, but the environment too, I think the overall global environment and what's happening in the ASX and US and all these sorts of issues with COVID and stuff, that might put a bit of a negative spin. You probably find that there's a bit of selling. There would have been a bit of selling on the open, but the good thing was it got held up quite well. It's a good volume coming out the first few days, and then it got held up, soaked up around that dollar mark, retested $1 only just. If I just get that probably a bit better, you can see earlier on, and then lifted, and that lift was accompanied with some good volume too, and it took out the high from, I guess, the opening day, and then pretty much consolidated that break of $2 and held that quite nicely. And then we're getting a green candle here, a good expansionary candle with a bit of volume. Some volume come out the next day, but then it kept lifting, and you get any sort of green. It was starting to get accompanied by some good little volume coming into the market, and then you got the late chasers chasing it higher, good expansion higher, accompanied again by some good volume. Now what we're seeing, this sell-off, this move down, the volume's a bit less. So it's, for me, it's people, who probably didn't get out here, bought it in here, maybe take some profits. People who are trading it as opposed to, um, expecting the world from the stock. But what I'm looking at now, I do think that $3 mark, you've got this little push up here, not really $3, but it got up to around the 260 mark, $2 held. We've had this pullback, rejection off a 3, and if we can hold this level, I want to see a higher low, but it's smack on the MAs as well. And if we start to see some volume come in the next couple of days or so, but we get it chopping around, I'd love to see it chop around, and then it could be a buy. And we'll have more. We'll know more what's happening with the elections, because I think this could take a couple of days to play out. I don't really want to buy it here and then buy on the break. If we do close like this today, and buy the break of 340 something, and then you find out the election's thrown a spanner in the works and we get a massive sell-off through 3. I don't want to get caught in that. I'd rather give up the stock than actually trading it, as opposed and waiting on the sidelines for more, because it's one of those big events, the elections, and you don't want to get caught on the wrong side of it too much anyway. So do like this one. I think it looks quite good. Wouldn't mind seeing a bit of a retest, say 320, bit of a flush. You're going to get something like this, rejected, hold, and then you've got the entry set up, you've got your high, low, everything's looking a lot better. And I think, like I said, we'll be through the elections by then. Let's get on to AAC. That's one that I put out the other day, which looks quite good. It looks like it's trying to hold, 108, 106, you can see. Let me just draw that up. Sorry, let's get my little drawery. I probably don't need to draw. Actually, don't need to draw. You can see that it's that 108 zone. You can see it had a big rally. It's a good little volume. Pressed it up, got to 117, backed off from there. Through sort of around that one, rejected around 108, 107.5. This little zone in here, bounce, and we come back through it, but it was getting soaked up. So it spiked through a couple of times, but it managed to finish around 107.5, 108 for a few days. So if we can lift from here, I want to see, it's mainly that 112 mark that I want to see broken. If we can break that and we can form a higher low, that would be great. I wouldn't mind seeing a spike through, come back and retest the zone, or around or just below that zone even, but it start to show that it's going to hold a higher low, essentially like this. Then I think that could be a nice little entry off the MAs after it breaks, off essentially a retest fail or double bottom, you want to call it, through 108. And I think you're going to be looking good. And that's the weekly. That would, to me, is going to lead through $1.20, potentially testing up to $1.30 or so. So that's one to keep an eye on. INR, I think, was the INR looks, it's had a good strong rally there. I don't know if this is going to be enough to take some heat out of this move, and it has been constantly grinding lower. It could just grind lower sideways and then grind lower again. You don't know, but you want to see volume come into it and hold it up here. Okay, so I think it's very important at this stage, because you've had, even on a weekly basis, from 10 to 20, you double your money if you're buying it around 10 cents. So that's 100% rally off that level. I just think we might need a bit more heat to come out, considering that weekly trend is still down. Essentially, you got the highs up here, big flush down, bit of a rally, another big move down. This could be just another rally, leads to a breakdown of below 10 longer term, and we just give up all those gains. So I think it still needs to do a bit of work on this, but it's, that little rally there with some volume too is a good heads up that this could be set to move. It just needs to put in that base first, some around 17 or thereabouts, if it can at this level. I don't mind seeing a flush through down to 15, 16, but I want to see that reclaim pretty quickly. All right, what do we got here? Who was first? KTM. KTM's a motorbike, isn't it? KNM. The small punter. That's actually quite good. What do they do? It's one of those ones that very small market cap. No volume. There's a big offer there at 2.5 cents, which seemed to be, they want to cap it by the looks of it. So it's, to me, that's sort of signs of trying to flush it lower, and someone's trying to accumulate a position as such before that break. If that break, the concern is, you can see why they do it. if you can see, well, let's just show you. If you can see depth, when you're looking at it, you can see these big offers start to stack up. If you're looking at depth, you're sort of looking at that go, and if they chew through it, great, because it means that there's some solid buyers and they're not waiting for it to get back down to 17, 18, 19, or the 2 cent mark. They're willing to jump in now because one, it could be some good news that they know that we don't, that that is coming, and they just want a price because they know that that's going to trigger up. But they tend to put these massive offers at key levels, just to try to keep the breakout from happening, and you see that as a retail, they'll be looking at that, they might look at the volume and go, oh, look, there's a big seller in there, it was going to be hard to get through, I'm sitting on some small gains, I'll take it off because I'm worried about the economy, I'm worried about this, that, and the other. And they start to sell back into it, but they're selling back into potentially the person, whoever's put the big offer there, they're selling back into their bids. That makes sense, but it tends to happen quite a bit. Well, you'll see it quite a lot, especially at key levels. So I'm saying all that, it looks like the 2.5 cent mark is key level. It's holding, and it's looking quite nice too. You can see this latest rally is with some good volume off 1.7s, and it's a little pop up to 2.5 cents. So I think that 2.5, so 2.4, 2.5, where that big offer is just trying to stop it from breakouts. Anyone that's looking to buy looks at that and I'll put in a bid a bit lower. I'll put in a bid. I won't buy it at market because it's not going to break out. No, it's not really going to get through that big offer. So you tend to cap it that way, and then someone might accumulate a bit lower. They can get a better price anyway, or just keep it from taking off if you haven't got enough. If someone wants a big parcel of a stock, they don't want it to get too high because then they'll be chasing it like everyone else. They want to accumulate that position and muck around with it so they get a good price at lower levels, and then leave some ammunition, I guess, in the gun to, if it starts going, they can start pushing it. That means just buying at market and pressing it higher, and then they've got their average prices a lot lower. So either way, that looks, my mouse has disappeared again. Where are we? Here we go. Either way, I think that looks quite good. Now, what did they do? Communication, media. Okay. It's a big market, I guess, to get into. So even the weekly doesn't look too bad. The weekly's getting extended up here. So it might need to, it doesn't mean that you can look at it, last time it was extended here, minor pullback and bang, up we go. So generally when it's rallying hard and it's getting a bit of euphoria, it's going to be extended. It's just something to take note of. If the daily starts to break down, then the weekly is extended too, then maybe hold off. CDA. Is this the one you've got, Pete? It's looking okay. For me, that key level, don't really need to look at too much of that. Let's just draw that up. All right, so that's the trend up there. You can see we're probably, if we break down through, I think that's 1050, is it? I didn't quite catch it. 1150, 1050, 1050. So this is 1050 here. Whoops. I'll just mark that up. This support, 1050. Okay, so if I would suspect the way this is, this market's trending high, had a bit of expansion here, it has to consolidate while basically the market catches up, not so much, and that's a good sign. You rally up, like I said many times, you have a good rally and you consolidate and you don't grind lower. If you're grinding lower, it means people are coming out of the market and buyers not supporting it as much. They want to see it lower, but if they're happy to buy and accumulate at a higher price, around holding 1050, that there's going to be another leg up. And obviously we didn't catch that, but you can see that there was a good little setup here, a bit of contraction in there. You buy the break and you've got not a massive trade on your hands. And don't forget, it is extended into that overall trend, but still, you're on the board quite quickly, in the green quite quickly. Well, you can see the market's come back down again, and rejected into that support. Didn't get there quite. This red candle here, it's got rejected down to 1050 and then bounced back up again. So if we see another rejection at a higher level back off the MA, say 11 bucks, 11.50 in between there, another bit of a pullback, and it holds this higher level, I think that's ready to consolidate, and the important level is going to be through, say, 12.10, 12.20. You'll see it'll start to, on the weekly, am I? Not daily. You'll see it's that level there. If it start to, press into that 11.50 level, get supported. Stochastics are looking good. You're in a good little zone. The weekly's rolling, which is a bit of a problem. So the weekly's suggesting that trend is running out of steam. So that's one thing you'll be careful with. It doesn't mean that it can't go higher. Like this, for instance, we run out of steam a bit here, rolling over a bit, we still go higher. We go into new highs. So if you're buying it on the daily around 11.50 and it gets through 13, great. You've still got positive trade, but you've got to be wary. And this comes from a trading perspective, not a buy and hold perspective. Because if the weekly, if you're a buy and hold, you might be buying the high, depending on what happens with this weekly chart and how far it goes back down. So you've got to know if you're looking to get into it, you've got to realize that's an extended move. We rallied back in 2019 from about $3 up to 8.50, big flush lower earlier this year, and it's made back all the losses plus a lot more, or double, basically. So if you happen to buy it off here, great. You're essentially 300% gain. But you've got to realize now we are extended. We're extended again. So on the weekly anyway, so there could be a bit of heat to come out on that weekly. You might come back down to retest 8.50. We don't know. So if you're buying 11.50 and you're going to hold it longer term, you could be behind the 8 ball quite a bit, and you never know what happens with the global markets. And if there's going to be a big meltdown, this thing could easily retrace quite a bit. So just sort of saying, if you buy it and you've got this little setup in your daily, trade it off the daily, and tighten your risk, take some gains off the table. If you do get 10% up or so, take something off the table and let the other part run, because you never know what is going to happen. MYQ, what are they? We traded that. I can't remember what we did on that, Pete. But, I know we traded that in the past. A bit the same. It's had a very good run up. It's had a run up from 40 cents, basically triple. So there's a lot of stocks that I don't know what this does, but I couldn't buy this up here by looking at that chart. I can't. Because if there's good news, it's on the back of good news. They're going to need some more good news to keep pumping that higher. They need to keep stacking up the good news, I guess, to keep dragging in more and more fresh buyers without cleaning out anyone. If we consolidate here, around this zone, we consolidate around here above 90 there, and it could look like a buy. So what you've got is this pressing higher, some volume coming in on that rally. Not much volume when we're consolidating, then it starts to rally. You've got this volume coming back in again. You can see on this candle, good volume comes in the next day. Next day it's back in again. It's a good volume, and it's actually, I know it's a red candle, but it has held above the previous session's day. It's just kind of a reversal candle. You've got to be wary that, okay, there could be some pressure over the next few days, which you saw. Okay, when you get that kind of move, you want to see it, expand, end up on the highs. This one, essentially, you were under, if you bought it late into the session, into the close, you're under a bit of pressure for the next few days, but it did lift up. That kind of candle is more like it's gapped up on the open, flushed all the way lower, and some profits have been booked. Head sideways, we had this bit of a retracement, but we're back to the MAs now. You probably suggest that this is the anchor to the uptrend. We pushed up, higher low, potentially a higher low in here, maybe that $1 mark. It has flushed through $1, finished below, straight back up again, and it's been holding that level now. So I think if we hold above 90 cents, 95 cents, or basically where we are now, we hold this level and we start to lift again, getting some good volume. The daily chart, again, it could be a nice little setup to run higher, and you'd be looking for that 150 mark. Okay, and if it does go, if you're getting $1 go to 150 or 140, it's a handy gain. Okay, so you can trade this on the back of that, but realizing that weekly chart, a bit like that's extended. So we could have something like that. It's extended, and we've got to retrace quite a bit of it. We don't know yet. So you run the risk trading off the daily that's going to happen. Okay, but again, if the setup's there on the daily and it's holding, and you got evidence that buyers are stepping in and holding it around these MAs around $1, $1.05, then yeah, jump in. But if it starts to break down, if it gets through 90 from here, I'd be a bit concerned. IKEGS, PS Group, what do they do? Anything with keg in it, I'm interested. Profile, technology, GPS data capture devices, okay. That's a tougher one to analyze. It's purely because, you know, it's had days where it's done absolutely zero. So there's no volume. I would, you know, personally, just purely the volume, I wouldn't go near it. I just think it's a tough one to trade. This one could, IKE, not IKE, LKE, is it? Ah, well, that makes a bit more sense, mate. There you go. Lake. That basically needs to me hold up at 5. So you've had good run up, here, obviously. Big, you know, a lot of heat coming out of that. Was you know, well and truly stretched, extended, whatever you want to call it, back to the MAs, which is good. Held the MAs, but when you see this kind of thing, when it grinds up, I'll be a bit more concerned that we're going to have a secondary leg down. And that, I mean, it's easy to say now. It's not what I want. Easy to say now because it's happened. But looking at that action, when you've got good run up for whatever, you know, based on news or whatever it is, and the volume was, a lot of the volume was done on that last expansionary candle, and then you got this another big volume day the next day, you know, red candle, and then a lot of heat come out of that market. Then you've got from this low, you can see that that's rallied up. You know, but I don't like this kind of action, choppy action, all within the high, because I think it's not the buying that you want to see, if that makes sense. It's not, you know, your pros buying or anything. It's not really accumulation. I always feel that kind of action, you get big run up, big run down, you get this kind of grind up. I always feel that that leads to another leg down. And you can see it on, especially from indices, you start looking at the indices, and this kind of grind down is not, it's not conducive of really strong buying. You want to see down, you want to see retest and then start to hold. So you want to see the selling pressure is strong, but it's getting soaked up. Whereas this kind of thing, the sellers are just, they're waiting to get a better price, a better exit, essentially, or, you know, if they're shorting it, waiting to get a better exit. But there's still some sellers that want out there, and then buyers is, you know, not too strong in the buying. That to me, just, if you were watching this bounce the first day, you're probably gonna, and then you see this, you know, especially a green candle there, you're gonna step back a bit if you're a seller. You want to step up. You don't want to. You want to just watch it for a bit, because there's a chance that we start to grind up, especially after, you know, this run up here. And when you start to grind, sooner or later, I expect this kind of leg to happen. It's going to break down, which is what happened. You got gap up here, selling all day, and then the next day it broke down basically, and we started to see a bit of a breakdown. So let's get all this, clean it up. I don't know how to do that in one hit. What I'd want to see now is that level, to me, 5 cents has to hold, because you've got this lower high in play now. That's just squeezed down. We could have a complete, you know, wash back down to 3 cents, back down to where it started. I don't know what the news was or what's drove it higher, but this needs to hold 5. I think we need to retest it, hold it. It's a good chance that it will. You want to see, there's no volume now, so potentially with this move down and this move down, a lot of the sellers have come out. Anyone that wanted to close is done, potentially anyway. So if that's the case, and we do hold up, we might flush it and reclaim it. Then you want to see the volume lift. Any sort of green day, you know, if you get a little spike here, you want to see that volume lift from next to nothing to start getting some interest, and especially if it can hold above 5 cents. Okay, especially on a closing basis. If we hold above that 5 cent mark and we keep lifting, we start to see some volume trickle in, then at the very least we might get another pushback up to the resistance zone, that dynamic resistance, as in that falling resistance, whatever you want to call it. And you could have a profitable trade, but you need to get, you know, maybe something like this to manage your risk. Again, like we say, it's always about managing risk. And if you don't really have a key level, if you're buying here, you know, say you bought on this green day, I don't know where you put your risk. To me, that's way too, that's probably, you know, from the open 6.5 to 8.5, 30%. if you're going to manage your risk that way. So that's why I always think it's just stupid to buy in extended markets like that. You want to see what happens on the first pullback, because if it's going to go, it's just going to continue to go. So be it. Yeah, there's going to be a dime a dozen these kind of trades, but you want to see something that is going to be supported for a longer term, not just this spike euphoria, euphoria thing like this extension higher. Generally, when they realize they're wrong, which is probably the next day, they're the ones that are getting out. Anyone that's bought it late, because they're getting hammered. So there's no real pro money, I would suggest, that's in there until they start accumulating it. And they're going to accumulate on that pullback, maybe support, maybe here, let it go a bit, sell some back into it to get it back down, just to keep it from getting out of hand. If they think it's really, really good, and then it comes back into support, they start accumulating a bit more, let it lift, maybe take some off the table just to keep it in check. All right, so that's LKE. The last one we'll get on to TSO for Joseph. And I just have to wait for my good old trusty keyboard, all right, just give me 1 second here, guys. Sometimes turning it off and on again reconnects it a bit better. There we go. So TSO is, I don't like that as such. If it was strong, it's back down and out, needs to, I think, pop back up. You need to start building a base. The problem for me, it's got back below the MAs, and it seems to be, where are we at the moment? Down 14% today. I don't know what's happened. Is there any news that's pushed it down there? It's at gold zones. Is it some sort of capital raising they're talking about? Or is it just buy the rumor, sell the fact, which it could be a lot of? Not a hell of a lot. Well, there's volume in there. So if that's the case, I don't mind. This kind of action is good. That's a bit of a blowout to me. It looks like it went near vertical, so you can expect there's going to be some heat coming out, but you want to see it sit on the MAs and be a bit more constructive, not just one way. That's pretty much one way action down. There's no one really supporting that into the MAs. There's no real support into, you would have thought maybe some of these minor support zones into 30. It broke 30 today, hadn't retested it prior, didn't retest it on this day, which is the 29th, went straight through it today. So whether it bounces back and we big rejection candle, and then we start to hover above 30 and start to get supported around 30, I think the fact that gold's not looking too crash hot there anyway is putting pressure on this stock. So it needs to, if it's really, really good, even with gold prices come down, you should see support start to come in, but it's not at the moment. So for me, I'd just be sitting around waiting for that. What you'd be looking for, let me just, it's probably that one that I want. Is really this downtrend to start to be broken and start to hold. So you're probably starting to look, not so much that level, but you're looking up at maybe 35. We start to break up and test 35 again. It looks like this trend down, depending on what happens, is starting to fall apart. So that anyone that's been selling through there is done, or there might be some more selling, but I think it looks like once you start to break up out of that downtrend, it's buyers are starting to step in. Okay, but for now, your bigger anchors down to 15, so you've sort of retraced half of that move, probably more than half. So that's a bigger pullback than what you technically want to see. Remember the thirds rule. If you've got a rally up, you can split that rally up into thirds. When you're in the top third and we consolidate around that top third, great. That sort of thing. That's a good positive sign. If you have a deeper pullback, around the 50% mark, but within that second third, not so bad, but it's not really what you want to see when it breaks into that lower third, the initial third, or it retraces 60%. So it's not what you want to see, because it just means that there's a lack of strength in buying. Okay, and that's what it looked like it's potentially doing now. Was it rallying from about 16 up to 52? So yeah, it's probably in that third though. So the deeper the pullback, the more constructive you want to see that higher low if it's going to build. Not just, let's just clean that up. Not just a big pullback like that and expect a big bounce like that. That to me is not going to happen. It just shouldn't happen, because there's no accumulation there, and it's not any, it's not building any base to work from for a longer term move. Right. So for here, this one here, I'll be waiting to see what happens. I want to see that break. break back up again, get some support, see some volume. The volume on the downside doesn't suggest that it's going to be, especially down 14%, doesn't look too great, which you probably expect coming into the elections, a bit of negativity around what's happened on the weekend with COVID cases increasing. It's probably a bit of risk off mood, especially in your small punters like this. Right, I'll probably, any more questions, guys? Otherwise, I'll finish there. It's not the best of days across the board, but it looks at it, especially for your smallies. All right, I'll call it a day there, guys. Thanks very much for joining me. It'd be great if you can leave us a like on the channel if you enjoyed what you hear and help us spread the word. Otherwise, we'll see you next week. Any questions, feel free to send us an email to support@tradesetup.com.au. Enjoy your day, guys. I'll speak to you again soon. Bye.